In today's session, we will be working out a numerical where we will be preparing the combined statement of affairs. Combined statement of affairs, this is the first statement that we will be preparing as a part of the final accounts preparation in the case of a single entry system. Combined statement of affairs, we will be preparing in order to estimate the capital levels, and we will be preparing combined statement of affairs for two time intervals at the beginning and at the end. So we will come to know the opening capital and closing capital. So with that note, let us all look at the question together. The question goes like this: from the following balances appears in Sriram books which are kept under single entry. They have given us the details of the question and they've asked us to ascertain the opening and the closing capital of Sriram. Okay. Now, what you notice, they have given us two sets of values. One is for 1st April 2019, second is for 31st March 2020. So this will be for the beginning, that is at the beginning of the time period, and this 31st March 2020, this is for the one at the end of the time interval. So with the utilization of the values for 2019, we will be able to estimate the opening capital. With the values for 2020, we will be able to estimate the value for the closing capital. Okay. Now, the first statement that we will be preparing is the combined statement of affairs. And let's look at the format together for the preparation of the combined statement of affairs. Remember, combined statement of affairs we are preparing in order to understand the profit position. So this is the format of the combined statement of affairs. We have two amounts, and the first amount is for 31st March. This value will be for 31st March 2019, and the second amount column, this will be for okay, I'm so sorry, this should be 1st April 2019. This should be 1st April 2019, and this should be for 31st March 2020. Okay, so we have two sets of values, and these two sets of values we will be working it out like this. Okay, now let's quickly prepare the items into this. The first item that is given to us in the question is creditor. Now, what is creditor? Creditor is a liability. Okay, creditor is a liability, and the values that we have are 40,000 and then 45,000. Okay, the values that we have are 40,000 and 45,000. So let us consider that 40,000 and then 45,000. Okay, the next one that we have is furniture. Furniture we know is an asset. Furniture that we know is an asset. Furniture is 40,000, and end of value is also 40,000. Stock is 50,000 and 45,000. The stock is 50,000, and then end of the year it is 45,000. Then next is debtor. Debtor is again a asset. So that is 35,000, and then here it is 40,000. Okay. Then finally we have bank balance. Bank balance is also that is also an asset, and that is 2,500, and here it is 5,000. So with that we have considered the amounts. Okay, we've considered the amounts into our combined statement of affairs. Now what we have to do is we will have to balance. Now how do we balance? We balance by totaling up the asset and the liability side. Now when we balance, please remember, according to the accounting equation, assets is equal to capital plus liabilities. Okay, asset is equal to capital plus liabilities. So here, if you notice, asset side, the total is 1,27,500 and 1,30,000, which means your liability side should also be so much. Okay? Your liability side should also be so much, so that we have considered. Okay, so that we have considered. Now we have to figure out the balancing figures. Now please remember the balancing figure for the first amount column, which is 1st April 2019. This will be your opening balance. Okay, this will be your opening balance, and this opening balance we will have to quickly calculate. Okay, we will have to quickly calculate. So 1,27,500 minus 40,000, that amount works out to be 87,500. So what is 87,500? 87,500 is your opening capital. Okay, this will be your opening capital, and that is your balancing figure for opening capital. Now, likewise, now this amount column, you will leave it blank. Why? Because this value that you're recording in the second amount column, this is for 31st March 2020. And what we just calculated was the opening capital. So here, you will not have an opening capital. Next, what we have to calculate is the closing capital. Now, closing capital, this is again your balancing figure. Now, this balancing figure, so we are calculating for the end of the time period. Okay, so this we are calculating for the end of time period. So that will be 1,30,000 minus 45,000. That will work out to be 85,000. So 85,000 is your closing capital, which is the balancing figure from your question. So with that, we have completed the preparation of the combined statement of